Hey everyone. So I thought I would start off talking a little bit about what my general approach is to how I manage my finances, my portfolio, and what my performance was. And I'm using 2024 just because it was the most recent year, like what it's been. But like for me, and I'll preface everything with though is I mentioned previously that each investor is a different person with different skills, different risk tolerance, different goals, and a bit about how I think of my portfolio, and I'm trying to grow them in a way that I can go to sleep at night and not really stress that a trade's gonna, if it goes against me, that it's going to ruin my week or month, and I don't know what to do next. I basically have gotten into a system where I make trades, I can take my small wins, let them build up, try to avoid making mistakes, and where trades go against me, having an approach where, okay, a trade has gone against me, and here's how I manage that risk to mitigate like really drastic consequences. Trying to basically trade in a sustainable way. So the returns I get, you might see people put out content where they say they're getting 50% wins, they're getting $50,000 a month. For some people, I think it depends on maybe portfolio size. Sometimes it may depend on the risks that they're willing to take. I'm not in that category. I've approached it with the frame that my funds, they're either going to sit in a bank account or some kind of fixed deposit where I'm getting a small percent interest each month. Um, and as long as if I'm trading this money, it's growing both in or unrealized or realized. If the gains are exceeding what it would be if it were just in a bank account, then I consider that a win. My goal is to try and get enough money to the future that I can just live a good life, comfortable life, um, with a bit of just without stress. Right, that's my goal. I don't need to be the richest and the most successful investor. I just need to improve my own situation. I have mainly a diversified portfolio across markets, across sectors. I've got large cap, medium cap, mainly stocks that you'd find like as considered blue chip or in the S&P in my buy and holds. Right, largely I basically have a portfolio where it's buy and hold for as far as in my head, the stocks I hold are stocks that I should hold with no real time horizon. As soon as I start to see a time horizon is when I would think, okay, just gonna exit that position, and I've done that a couple of times in the past few years, but seldom, because the whole reason I'm buying stock is I believe long term, um, it's going to get better for those companies, and then supplementing the buy and hold strategy is options trading. Largely, I've had my success being an options seller. I use leverage. I have a margin account. Fortunately, I don't often necessarily need to go into to actually use the margin, but I use the leverage to sell cash secured put options. A lot of my positions, I don't have full blocks, so therefore I don't really sell as many covered call options. I have in the past. I will continue to where I do have blocks, but given the nature that stocks generally go up, like more often than not, is selling a cash secured put has been more profitable than selling a covered call, right? Like I mentioned, I'm not seeking super large gains each month, right? I'm trying to just have wins that build upon each other. So by the end of the year, my realized, and the reason I focus on realized profit is because that's actual cash I get into my account. That's cash I can do something with, whether it's pull it out to cover some personal expenses, whether it's to reinvest. Most often, I'm taking between 25 and 75% of that cash, and then reinvesting that into my buy and hold positions. So if you think of it this way, if I had 100 grand at the beginning of the year, then I would have $19,000 in cash by the end of the year to reinvest. That throughout the year I've been reinvesting. So um, so that's basically how I approach my strategy. I mean, if I can, like if I can get 19% return, realized return, like basically that cash in my hands, as we go along, like if my money were just in like a savings account or fixed account, fixed deposit, I would not be getting a return of 19%. Now, so that's how I approach my investments. Is, I think of it like the cash was going to sit in a savings account or a fixed deposit, and it would collect a few percent interest. But instead, I had it in the portfolio. I was able to generate all of that same cash, 19% return in cash in my hands that I can reinvest. I make a distinction between realized returns and unrealized because, yeah, it's great. The prudent thing to do when you earn your salary and you put it into like an ETF or put it into something responsible like blue chip stocks and just don't touch it and let it grow, right? It's unrealized. And that is the prudent play. Um, the reason why I think a lot of people get tempted to try and play the market where they can sell what they think is a high and buy again what they think will be a low. And then I think studies will show that a lot of people, the problem with that trading that way is that they miss out on gains. Actually, the worst case situation, which I have done a bunch of times in the past, which is I get a gain of a few thousand and then I sell. I don't know, make it the price up at $80, and then I think it's going to go down to like 70, and then I'll try to get in again. But maybe it goes down to 75, and then just goes ripping up past 80, and it never goes back down. You're missing out on those gains. I think what tempts us to do that is because we're trying to get ahead. Everything's going up, everything's getting more expensive. But if you can just generate more cash and you try to maximize, because how else are you going to get cash? The only other way to get cash for most people is their job, but you have other bills to pay. So you're like, what other ways can I get more cash? And so for me, once I realized I can trade options, that's when I realized, okay, you know what? I can get this cash each month, and I don't have to sell these positions when they go up. I don't have to worry about them going down or up, or if it's a bad month, fine, they're going to recover. Whether it's maybe it's a tech slump, or maybe it's something happening with uh, like oil and gas, something like that. I can wait it out because I have other cash coming in, and I'm going to reinvest it. And so that's how I see these two pillars of my portfolio. Yeah, let me know if you see this and if you have any comments or questions or anything else you want me to elaborate on. And I'll get more granular as time goes on. So yeah.